Focus. Ideate. Innovate. Enable.
Hello and welcome to this week's episode of the SME Exchange series with special focus on mentoring. The underlying objective of the mentoring series is to guide and advise passionate entrepreneurs on how to overcome the hurdles and scale up. Today we have in our studio two passionate entrepreneurs who want to be guided and mentored. They are Shyam Sirur, Chairman, Kotmak Electronics, and Mr. Dinesh Dankani, Chairman, Regan Passions. Guiding these two entrepreneurs are Mr. Kewal Handa, Chairman of Salus Lifecare, Mr. Ajeet Khurana, Angel Investor, and Mr. Ajay Thakur, Head BSc SME Exchange. Gentlemen, welcome to the show. Shyam, if I may begin by asking you, could you tell our viewers and the mentors something about your business, how it started, when you started, and how is it going?
I started the business 25 years back in association with Mr. Mule and Mr. Prahlad. Subsequently, Mr. Gajanan has joined us and the board. We are system integrators in the automation field. We provide automation solutions to our clients. We are a B2B company. And we study the clients' problems and we select the hardware from some of these multinationals.
Okay.
And assemble it, program it as per the requirement of the clients, and put it in a panel, commission it, and give to them. We are around 500 people.
Dinesh, what do you do? Tell the mentors.
Our company, under the brand name of Liberty, is into manufacturing of fabrics, mainly viscose fabrics made out of viscose rayon filament yarn, and also into trading of yarns. Currently we are into B2B. Earlier we were into just trading of fabrics. Okay. Then we did the backward integration of manufacturing these fabrics, which we recently did around 7 or 8 years back. And then further backward integration of trading into the yarns which we were using in the fabrics to manufacture. So currently we are into a backward integration mode with particular plans to expand the further manufacturing. Currently around 300 people are working with us. It's a labor intensive industry.
Okay, now let me get straight into the problems. Shyam, could you list out to the mentors what are the problems you are facing?
Major problem is retaining good technical people. People join us and they move on to bigger companies. Then we also have to develop the younger team to, they should become technocrats, having commercial knowledge because they are in the field. Ours is not a very capital intensive business. It's more to do with knowledge management and technical skills. And that's our biggest challenge.
The biggest challenge. Kewal, you want to start with?
Did you do any time an exit interview to find out why people leave you?
Glamour for multinationals is always there.
Okay.
So and that could be also related to what the multinationals pay them. So this is one of the major issues there.
So I think you have boiled down to two issues. A is the glamour of multinationals. But I think the young people today really don't look for that glamour. They look for job satisfaction and good salary. Now, if they can get a good job satisfaction in a way they can experiment with you, have a knowledge base there, learn from you, I think that's for them it's very important. And the ecosystem of the organization is very critical. How much you empower them, how much you've given them freedom. Because these are all blue-collar, high-skilled people. They need freedom. They need empowerment. They need a space for innovation. Do you provide that type of ecosystem for them?
Ajeet, you want to add to that?
So I want to throw 3 quick tips at you. Obviously, you have been doing this for a quarter of a century and we are meeting for the first time. Yeah. So you have to pick and choose. On the one hand, I would recommend you considering the option of realizing that this is a reality, as in don't see it as a problem anymore. Rather say, this is the truth of business.
Very well put.
Let us just accept that. right? That is one approach to take, because the world has really changed. And I think that other than the factors you have listed, the thing about staying in a particular job for 10, 20, 30 years is not really part of our culture as much as it used to be some time ago. The second approach you could take is that the people who do the installation work or the integration work, which has, let's say, 5 or 6 different processes, if you could have your people become experts in 1 or 2 of those, as opposed to somebody who's sent on the site and does everything, what that does is that though you have specialists, no one specialist can tomorrow, for instance, become your competitor or become a full-fledged technician in another company. So I have found that if you can break up processes and make specialists, they tend to be loyal to this, because this is the one thing that they can do very well.
Ajay, want to add to that quickly?
I fully appreciate these concerns are not only with the small and medium entrepreneurs. I think these concerns are with also the so-called glamorous company that you are talking about. Even with the multinational companies, we have seen people exiting after 1 year or 2 years, and he has rightly said, now this has become the part of the culture and we have to accept this hard reality. But the only thing that I think that where we have found that most of the people have been staying with the large corporates is that these companies have got listed. They have created not only wealth for themselves, they have created wealth for their employees and all the stakeholders who were associated with them. So that extra incentive that they must be looking for. Another thing is that, of course, job satisfaction, whatever they have said, but there should be equilibrium between job satisfaction and the salary, the wallet that these guys are talking about. So unless until you open it, many of the times what we have seen that entrepreneurs are not so open-hearted to give the salary to the people. I think that is very much required. And another thing is that, yes, give them the ownership.
We have also given stock options.
But the stock options, let me tell you, stock options, there are many companies who say that I have given the stock option, but how you will unlock the value of that stock option? So there is no way to unlock the value of a stock option. See, if Infosys would not have listed, how the employees of the Infosys would have unlocked the value of their stock option. So we always keep on telling, and ultimately, let me tell you, all the people who want to get associated, they want to get associated with the company who has got brand, who has got name and fame. You can get all these things under one umbrella if you are going to get the company listed.
Dinesh, your problem number 1. You want to take
Well, I will not consider any problem as a problem. We will consider it as a challenge.
Okay, challenge number 1.
Challenge number 1 is procurement of funds.
When you say procurement fund, access to fund is the issue or the rate of interest is the issue? What do you mean by any procurement of fund?
Procurement of fund at reasonable rates.
Okay, let me ask Ajeet first to answer.
I'm actually going to clarify something. The end use of the fund is primarily working capital, equipment. What is the primary use of this fund?
For the further expansion, of course.
So, so that is a very different thing than, let's say, purchase of raw material, inventory, and working capital. The moment you are looking for capital expenditure, for instance, office, land, equipment, machinery, first this becomes a very different, because it's collateral backed. So the kind of rates that you could expect probably could be in the vicinity of 15 minus, probably 14, 13, 12. In those kind of range, I think you should be able to get. If you have exhausted all of those possibilities and you feel that, yeah, hey, that I know, give me a new suggestion. Here is an innovative method that I have found when you are trying to fund an asset. I have seen this right from farming equipment to computer servers, and I don't see any reason why it doesn't work with you. Maybe, and this is pretty crazy, see if it works for you. The equipment that the asset that you're getting, you could get asset investors, which means the ownership of the asset could be by an external party who is your investor. That person puts in the money for the asset, so there's no loan, there's no interest payable by you, but the output generated by the asset could be shared with this person. This de-risks your business. It allows other business partners to come in, and they probably now have to borrow money or have their own wealth. This could be one of the interesting asset financing options that you could consider.
So I would look at your business in a very, very traditional way rather than more sophisticated way and say, okay, I need fund for capital expansion. This will enhance my opportunities to be in the market at a better place, might increase the top line and my bottom line. Find out what the leverage you have on this. Do you really need debt or you need equity portion? Now, if you are already leveraged very high on debt, then probably you want to look at equity. And there are enough of opportunities where you can get equity partners, either as a strategic or a private equity, or if your performance is very good for 3 years, my friend Ajay would say, why don't you come to the exchange?
Exactly, I was listing a way forward for him.
See, I always fail. Okay, and there, I have seen a lot of companies. Most of them are in some or other way. See, 95% of the companies which are existing in India, they are leveraged, and most of them have gone for debt financing. And most of the companies I have seen who are dying its mood because of the debt financing, because the growth at some or other point of time has come down, and then they are unable to service their debt. I always fail, and I always talk to the promoters whomever I have met and tell them that you should have a proper debt and equity structure in your company. Unless until you have a proper debt and equity structure in your company, you will not be able to progress. Whatever we say that this type of financing, that type of financing, and this other financing, whatever it may be, it may take you to a certain level. But after that, with a good growth in your company, you will like to use the equity as a major instrument. And that's what we have seen these companies, whoever the companies have become such a large corporates or blue chip companies, they have at a reasonable time, and when their growth was very much limited, they have used equity as a very big instrument. So I will request you, and I request all the promoters, that if you have spent 7 years, 8 years, 9 years in your business, whereby you have used all your funds, maybe debt funds or your internal accruals, that also we call it equity only, then you must look into the stock market, the stock exchange, and it will never stop you to further leverage your debt portion. Another thing is that each time whenever I talk to the promoters, they have limitation to their collaterals. Equity is another form of collateral in your hand, which you can use for further debt financing, or what my friend is saying, that equipment financing. So equity you can be using as a collateral or equipment or whatever, or asset financing, whatever. Another major thing what happens is that every time we talk about interest rate, 25 basis point here, 50 basis point there, all these things we are talking. But if there will not be a demand, if you are not generating enough money in your business, whether there is a 25 basis point cut or 50 basis point cut, it is not going to help you. So you should have a proper balance. You leverage the stock exchange so that whatever is the cycle of the economy, you should have enough room to grow your business.
So has it addressed your concern to a large extent?
I will just...
sure.
It's like, I really agree with what you are saying, but I have noticed that the investors or whosoever trying to put money in the SMEs, they do not look much into the intrinsic values of the companies or the book values of the companies. The first thing that they see is the earnings ratio, and most of the SMEs are either family run businesses. Now if you compare the debt equity ratio in that manner, it is definitely going to be skewed. Also, when you talk to the merchant bankers or you talk to the people who are the actual investors, they do not justify the valuation they give you. So we as entrepreneurs feel that if I am going to give away my 25 or 26% at this value, it is better to take loans and repay them, and within 2-3 years.
May I just respond, because I have worked with a lot of entrepreneurs who have a similar concern that the investor who looks at a balance sheet or forecast for that matter does not fully capture the equity as the entrepreneur believes it to be. I totally appreciate that, but I want you to view it in a slightly different way. Your equity, if it is truly in the sense, for example, your goodwill, your know-how, your relationships, if that has to be factored into the equity, I think if you could indeed go with the listing route that Ajay mentioned, you would see that the investor's behavior is very different than if you're trying to sell equity in a private market. The amazing thing is that even if you sell a very small proportion of your equity, whatever the minimum required by the exchange requirements, your 100% of the equity now becomes collateral, as in the value gets unlocked. I think that is the key when it comes to listing. So though listing is a form of fundraising, but I want you to view it as a special form.
Okay, good one.
The IP rights, if you have certain technology, you have devised something which is very unique and proprietary to you, I think you should put a value to it. Unless you tell the world that this is the value of my IP, nobody will recognize it. And I'll tell you, there are a lot of private equity firms give valuation to the IP.
Right.
And they look for this such type of IP rights for giving a valuation.
Ravi, one thing I would like to add here, and he has raised very valid points. Please always try to understand the person who is giving you money, the investors whoever are there, they are smart enough. They understand the balance sheet. So if there is something hidden, and if you are not revealing it in your books or in your balance sheet, let me tell you, investors will be wary. They are not going to put money in your company. Please be sure, number one. Number two, whenever I meet the promoters and all the promoters, let me tell you very bluntly, most of the promoters feel that the value of their company should be this much. Okay, and that is not the reality. Okay, ultimately you have to put some money for the investors who is taking huge risk. And let me tell you, equity is the riskiest form of investment for the investors, and for the promoter is the safest instrument to take money. So it's very difficult. Number three, let me tell you, a stock market is a dynamic place. Maybe today you are diluting 25%, you are getting 50 crores valuation. Maybe 5 years down the line, you may be diluting just 10% of your shares, but getting 75 crores valuation. So it's a dynamic market. That's why I am saying a stock market is a place where you will unlock the value in some time. It will not happen initially, but with some time, let the perception of investors get improved about the company. Let the investors have faith in your company, and because it provides liquidity, stock market provides liquidity, so it will give further trust to the investors to invest in your company.
Okay.
Also, I wanted to know more about the stock exchange, and today we are doing about 250 crores. At what stage do you feel it would be right to go public?
So as far as BSE SME platform is concerned, we have only got 3 requirements. Okay, your net worth should be 3 crores with 2 years of profit, or 5 crores of net worth in case you don't have 2 years of profit. You should have 3 crores of post-issue paid up capital and 3 crores of net tangible asset. So if you have all these 3 things in place, any time you can go and get your company listed. So there is no issue in that.
Depending upon
but do you think there are investors who will invest? I mean, you go public and then you don't get investors, then what happens?
See, in the SME platform there is 100% underwriting. So both the merchant banker and you people will sit together. There is marketing, merchant banker does all the marketing, etc. They will tell you what is the valuation of the company.
So if you have a good story to tell, and the good story is how you're going to do in future, and what are you going to do with that money? If you have that story to tell, you can get a premium valuation. But if you have no story to tell and just you want to leverage on the current assets, probably you may not get great valuation. So it's a call that you have to make, what story I want to say, and that based on what forecast you are doing about your business.
I want to give parting advice to both Shyam and Dinesh. Kewal, starting with you.
To Shyam, I think it's very, very critical that you look at your business. Your team should get together, look at your strategy that you're doing it, and start looking at backward integration first. And also maybe forward integration, rather than being a B2B player, can you be a director player to the end consumer. And that's what will define how do you want to raise funds and from where do you want to raise funds. To you, I think it's a labor intensive thing, but your skill sets need to be enhanced, and therefore recruiting the right person for the right job becomes very critical.
Ajay,
raising equity funding, I think, is a critical decision for both of you, but for different reasons. So I would point out one thing which we have not explored yet is to culturally and mentally be ready to take on investors, because your entire way of functioning, reporting, being accountable and growing here onwards will change. It won't just be that somebody has shares, it is also that a relationship develops with external entities which you become accountable for. So see if that is what you are ready for, and if you think you are, then that may be the way to go.
Ajay?
I think for him it should be a balance between wallet and skilled employee and retaining the employee. And exit interview, as Kewal has rightly said in the beginning. And second most important thing that I had talked about, please come and get listed on the SME platform. SME platform also give you the 2 years time to understand the compliance structure and how to tackle with the investor, the external agency and internal agency, and how to expand yourself. So that is very important thing. At the same time, after 2 years, you can migrate to the main board if you understand everything. And same thing is true with you. I know that you are facing problem with this skilled and unskilled labor problem, but that is prevalent across the country. You may have some linguistic problem, but with the time you have to cope with all these things and keep on skilling the laborers and move ahead. And second thing, of course, you should have a proper balance of debt and equity in your balance sheet, so that your balance sheet should start looking healthier and people start investing in your company. So these are the things that.
Okay, Dinesh, Sham, hope some of your concerns has been addressed. Kewal, Ajeet, Ajay, thanks for being on the show. Thank you very much.
Focus. Ideate. Innovate. Enable.